Welcome to ShortView Trading, it's your morning market hit for Friday, 12th of March. What matters today for traders? Well, on Monday this week, we were nervous about markets. We were getting buy signals, but we thought there may well be a little bit more downside to key support levels. Since then, of course, markets have rallied aggressively and we've managed to jump on the long side and enjoy some of this upside that we've seen over recent trading sessions. Now, though, of course, the S&P 500 is back at its intraday highs. It tested them yesterday, eased off a little bit from those levels. And the question becomes, with a retracement of all of its losses, where to next? And of course, other markets are starting to break out to new highs. We're seeing that with the DAX, as you can see in front of you now, or the Russell 2000, the S&P 600, all sorts of markets, the Dow Jones Transportation Index breaking out to new highs. And with that, we've seen our short-term risk appetite scoring system go from buy earlier this week at the back end of last week onto sell overnight. And with that, we're left with the key question: is the S&P 500 about to break out to the upside? Or indeed, is it going to continue its third consolidation phase that we've seen since the March 23rd lows in the bear market last year? As you can see from the chart in front of you now, there have been 3 rally phases and 3 consolidation phases, with the market consolidating in June last year after its sharp pullback early in June, and then rallying through to early September when tech was pretty frothy, and then consolidating through September and October. And then its third rally just before the presidential election on the vaccine news announcement. Then since Jan 21st, we've been consolidating those gains, about 6 weeks in a sideways pattern. And the question is, are we still in that, or are we now starting to break to the upside? But indeed, there are lots of ways of thinking about that question, and we cover those in today's Daily Rag, available to subscribers via the website, or for a free trial, click on the link below. And we also cover those within our tactical asset allocation publication that comes out at the start of every month. This is a 1 to 4 month view on equity market direction. Occasionally it comes out intra-month, but every month at the start of the month, we publish on that our views on where we think markets are going on a 1 to 2, 3, 4 month basis. But one of the clues to that question comes from the behavior of bond yields. And of course, bond yields have been selling off dramatically for much of this year, reaching a yield high in late February and then testing that high once again earlier this week. Now, we're back at those high levels pretty much as we're recording this video, and it looks like it's becoming quite a serious resistance level for yields. Obviously, in terms of bond prices, support level. And of course, if you think about what bond yields have been doing to markets in recent weeks, they've been causing all sorts of trouble, particularly for the growth stocks and the tech type areas, the long duration stocks, which have been struggling as bond yields have backed up. And naturally, a very big part of the S&P 500 is growth, the growth area of the market, the tech, the long duration stuff. So if bond yields stabilize here, that releases that pressure, that removes that pressure that's been coming upon equity markets, particularly US equities in recent weeks, and allows them to flourish. So that's an important piece of price action to watch, an important yield level to watch. Important to watch the price action of bonds. But for our full analysis of all the clues as to where this market may go from here, please see today's Daily Rag, available to subscribers via the website. So what are we watching today? Well, in terms of price action, bonds very closely. That yield level that I raised, 1.60, we'll be keeping a close eye on that. Equally, whether or not the S&P 500 is breaking into new highs territory, that'll be interesting as well. But in terms of macro data, US producer price inflation is interesting, and particularly the Michigan sentiment estimate out later on today. So that's it from us. That's your morning market hit for Friday, 12th of March. Thank you for listening. Please do subscribe to these free videos on YouTube. Simply search under ShortView Trading, or follow us on LinkedIn, Twitter, and/or Facebook. Thank you for listening. Stay safe. Trade well.